purchase price discount straight off the top of the list price, or request for some seller credit that can be applied on the back end of a home purchase. Which one of these two is the better option for you as a home buyer? Well, welcome to the channel. My name is lor.vang, a licensed realtor and loan officer, here to help you with your next move. And so this might be a question that you may or may not have ever thought of, but to you, it might sound really simple. Purchase price discount. I can buy a home for cheaper. That sounds like the better option, right? But let's take a deeper dive into this, right? Because a seller closing cost credit can be pretty powerful as well. So without further ado, let's get into the numbers to show you which one is the better option for you. And so in this specific example, we're going to say that we're going to buy a home for $330,000. And we're going to use a conventional loan with the minimum 5% down payment at an interest rate of 7%. And so scenario number one is going to be our control scenario. So no purchase price discount on the front and no seller closing cost credit on the back end either. So let's go through the math and figure out the numbers here. So $330,000 purchase price, 5% down payment of $16,500 that you will need to have in your bank and bring to the closing table. And so this makes the loan amount $313,500. It is going to be a 30-year fixed loan at an interest rate of 7%. This makes your monthly mortgage payments, principal and interest only, doesn't include any property tax or home insurance, at $2,085.72. And so this also estimates your closing cost at 3% of the purchase price. So it comes out to roughly $9,900. And now your total cash to close, right? So your total cash to close is going to be your estimated closing cost plus your down payment, right? So you add those two together and you get $26,400 that you need to bring to the closing table in order to purchase this home. So now let's look over at scenario two, right? So let's say this home's been sitting on the market for a little bit, right? And so, you're a savvy buyer. You're not going to offer full price, right? So you know that the seller's a little bit desperate. So you're going to offer 10 grand less, right? So now you got the house for a little bit of a discount, right? Under list price, you're happy. 320 grand, 5%, same down payment amount or percentage wise, comes out to $16,000 in the actual cash. So you're going to have 16 grand in the bank again. Very similar there, not much difference. Now your loan amount though is going to be, significantly different. Now you're at 304,000 compared to 313,500. And so now let's see how that shakes up for your monthly mortgage payment. So 2022-52 for a savings of $63.20 every month. Might sound like not that much, but let's multiply that by 12 for annual savings of $758.44. And so now your estimated closing costs, again, the same 3% of your purchase price. So $9,600, you save $300 on closing costs there. And so now what is your cash to close? In this example, scenario two, it's going to be the estimated closing cost, $9,600 plus $16,000. $25,600. So you saved $800, right, in closing costs out of pocket. So not too bad. You saved yourself $800 that you have to bring to closing. So let's look at scenario number three, where instead of a purchase price discount right off the top, you're going to get a seller closing credit on the back end. All right. So how does that look like, right? So scenario three, $330,000, same purchase price. Again, no discount on the front end, 5% down. Everything is essentially the same as scenario one because same purchase price, same loan amount, same down payment, right? So your scheduled payment is going to be the same. Now, when we get down towards the end here, now we're going to ask the seller, hey, you know what? Instead of asking for that 10 grand off the top here, let's ask for 10 grand on the back end, right? So now we apply that to offset your closing cost credit, right? So essentially, you don't have to pay for this closing cost here, right? And so you see that there's actually $100 difference, right? So you actually have $100 that you cannot apply fully because your closing cost is estimated at $9,900 perfectly, right? Which in a perfect world, it's probably gonna be a little bit different, right? But just so you're aware, you cannot use that $100 towards your down payment. Closing cost credit has to be applied strictly to closing costs. Although you could, if you wanted to maximize priced at $100, you could reduce your purchase price by $100 as well. So you could put it there instead if you'd like. But the most important thing at the end of the day now that you've got that closing cost offset, you only need to bring just the down payment amount to the closing table. So that's $16,500 versus essentially $26,400 or $25,600. So essentially that's 10 grand, 10 grand that you did not have to bring. And so which option is the better option here, right? And this brings us back to the initial question at the beginning of the video. Which one of these options is better? Well, the answer is it depends on your unique financial position, right? So if you already have a lot of cash saved up in the bank, saving 10 grand upfront today may not mean anything to you, right? You may prefer to take those small savings over the next 10, 30 years, potentially, where they will make a significant difference, right? However, if you are a buyer who doesn't have a lot of money in the bank, right? If you're going to use up a lot of your capital that you have saved up over the years just to buy this home, money's a little bit tight. You may not even know if you have enough to purchase this house, right? Well, instead of thinking, hey, let me go ask for a purchase price discount right away, let me ask if they're willing to apply that discount to the back end as seller closing credit. So that's going to help you as a buyer where money is a little bit tight. You may not know if you have enough to close a home to help you actually buy that home, right? Because if you think about it, if they can help offset your closing costs, now you as a buyer, you only need to basically cover the down payment. So that is a huge benefit for you as a buyer who's trying to get into a home. So that can really help you to be able to do that. And on the other hand, if you may not even need that portion of it, you already got enough just to get in the home, but you may want a little bit extra money to, say, furnish your house, right? Some new appliances, maybe some nice furniture, decor, or maybe even a little bit of remodeling project to make your home feel the way that you want it to be. So depends how far that 10 grand can go for you in this specific example, right? So hopefully this video helps you to decide and provided you with some value. If you liked it, help and give me a thumbs up. Share it with anybody that needs to see this video, and I'll see you in the next video.